Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu, this is Fintech Daydreaming.
Hello, welcome and thank you, dear listeners, for joining us for another episode of our so far thrilling season of Fintech Daydreaming. My name is Ville Sointu and I have the privilege of being your host for this episode. My trusted wingman today, as always, is my good friend and co-host Paul Krogdahl. Paul, how's it going?
It's going really good, Villa, but it always does, right? When we get together to talk about fintech, banking, technology, and always have a fantastic guest with us. So it's the highlight of my weeks, if I'm honest.
Yeah, I think we're kind of seeing this fantastic streak of really kind of good guests that we're having for season 3. I'm almost like afraid what the season 4 needs to look like after this, but yeah, it can only get better, I guess, as we go along. But now we, of course, need to keep up with our traditions and proceed to hearing what kind of a fintech joke our listeners have cooked up for us this time. So hit me, Paul.
Okay, as normal, Villa, you ready for a joke?
No, but you're going to tell it anyway, right?
Yeah, I suppose so. Knock, knock.
Who's there?
Satoshi Nakamoto.
Satoshi who?
You will never know.
Or will we? Will we? I don't know.
Well, we'll find out whether it's a him, a her, or they. But and this time, I have to be honest, we didn't get the joke from a listener. We did a Google search, so it's my fault for picking the worst joke I could find. But dear listeners, we're running out of jokes. Send us some more, please.
Well, please send us some jokes, because otherwise it's just gonna go downhill from here, I guess, if we're gonna have to Google some more jokes. But hey, on with the show, as they say. Now, today we have the absolute privilege to have another fintech superstar with us. I have to say, when we started the podcast originally last year, I thought of a couple of people that I would really like to have on as a guest one day. And today's guest was really, really high on that list. Now, so sorry, Elon, maybe later. But I first saw Dave Birch on stage in Mobey Forum's 10-year anniversary conference in Helsinki back in 2010.
Wow.
Now, in retrospect, he shared an uncannily accurate perspective of how the future of payments looked like 10 years ago. But most of all, I remember how his presentation made the audience feel. Everybody learned a lot and laughed while doing it. This was pretty much unheard of, at least in my books, in a banking conference back in 2010. Now, fast forward to 2021, and Dave is an author of 3 books so far, and he writes about identity, money, evolution, and potential future of the financial system. And I heard also there is a 4th book coming soon, I've heard. Let's see what Dave says about that. Now, in addition to being an author, he's an advisor and commentator on digital financial services, leads 15 Megabytes Ltd, which is his advisory practice. He's a global ambassador for Consult Hyperion, which is a secure electronic transaction consultancy that he helped to found, and a long list of very prestigious titles and board seats that I won't spend time on listing here, because we definitely should hear about from the man himself right about now. So welcome to the show, Dave. How are you doing today?
I'm doing great, and thank you for that very generous introduction. You're very kind, but thank you.
Good to have you with us from your hometown of Woking, I heard.
I'm in Woking, yes.
Yeah, perfect. We've heard a lot of stories about Woking through your Twitter, and I'm enjoying all of them for good stuff. Now, we couldn't be happier having you with us today. I'm sure most of our listeners know you and your work already, but for the few who might be listening to us without a fintech background, hi, Mom. What's your background, and how did you end up earning the well-deserved title of being one of the leading voices in digital financial services globally?
Well, I got into it via payments, really. So my background, I'm actually a physicist originally.
Wow.
But I spent my early career in consulting. And I became an expert in secure communications of one form or another, both civilian and military. And then when we formed the company, we took some of that expertise into the financial sector. And I won't pretend we were planning for that. It just sort of happened. And that took us into payments. And I really enjoyed that work. It was very interesting because I liked the payments work because it was mass market, it was population scale. You were working on, you know, ATMs and credit cards and things that everybody would use. And I liked that. But after a while, I began to think, and I wasn't the only person that thought this, I'm sure other people thought this as well. I began to realize a couple of things, really. First of all, the transformation from physical to electronic money was more interesting than it seemed at first. It wasn't simply a matter of using cards instead of bills. You could see there was a transformation taking place. You know, we were digitizing money, but there was the opportunity to create digital money in the future. And the early experiments in that fascinated me, even though they didn't particularly take off. I mean, nobody now remembers the days of Millicent and Hashcash and these kind of things. But I could see there was something. And then when you got into actually delivering these things into the mass market, it became very clear to me that a lot of the problems, the barriers that had to be overcome in the weren't really payment problems. They were identity problems. And it was this underlying issue about online and digital identity that was really sitting behind everything. And I could see that if we could solve the identity problem, then a lot of other things which seemed to be very complicated and intractable problems would go away. And the more I thought about that, the more interested I became. I edited a book about digital identity back in 2007, which kind of opened up my eyes to the variety of different kinds of identity and how it could work. And then for a few years, I wrote some blog posts and I began to speak at conferences and try to persuade people that something big was happening. I mean, I remember in those days, you know, I can remember in the early 2000s going to conferences to present about mobile payments and saying that I thought mobile phones were going to be big in payments, and that was seen as radical, but actually. And then I was persuaded to write a short book about it. I wrote a book called Identity is the New Money, which put a few of these ideas down. And I was very fortunate because I wrote the book at a time when people were looking for some new ideas, new ways of thinking about identity. And I got some very warm feedback on that, which helped me to, okay, maybe some of this stuff's not crazy. Maybe I'm thinking about it in the right way. And it kind of developed on from there. And I have to say, I mean, I don't want to sound like a complete, you know, but I think I was right about a lot of that stuff. And in a way, it's disappointing that 10 years on from the talk that you're referring to there, I feel we haven't made as much progress as we might have done in some of those areas. And I'm I mean, I don't want to sort of cause problems for people or anything, but I wonder if we spent too much time talking to banks and thinking about banks, because, you know, at that time, and especially given the experiences in the Nordics with Bank ID and Nets and all these kind of, I sort of thought it would be banks that would fix this problem. So, you know, if you're trying to stop people accessing adult services online, who knows whether I'm over 18? It's the bank. You know, if you're trying to stop fraud online, who knows that it's really my bank account? It's the bank. You know, if you're trying to demonstrate attributes online, which we've all come to understand is the way forward, without revealing personal identity, well, it's the bank that can keep my identity safely locked up in the vault and give me the credentials that I need to work online. So I spent many years, you know, working with banks and talking to banks, and I remember there was some very groundbreaking work done by Swift and other people, but somehow it just didn't really get traction. And so now we find ourselves at a time when there's a desperate need for digital identity. You know, the pandemic has transformed our thinking about this, Because before the pandemic, the only people that needed this secure login really were banks, because they didn't care about anything else. Who cares about social media and all these kind of things? But because of the pandemic, we've had to go online for health, for education, for government services, for all kinds of other things. And so the problem of not having good digital identity is beginning to stand out. And I don't just mean for people, because I also mean identity for companies and other things as well. So I guess that's where, and that's how we got to today. So the priority of what I would call digital identity rather than digitized identity has gone up. The pandemic has been a shock, which has shown us the costs of not having good digital identity and interoperability. And at the same time, you have new players in the space. You know, if I go to a web page, I mean, the other day I went to subscribe to the New York Times, and I go to the New York Times. If I see sign in with Apple on that web page, that's the first thing I hear. So I go there now, and what do I see? I don't see sign in with your trusted bank that's a regulated institution that has ombudsman and rules and will look after your data and will be subject to penalties if they're hacked. And I don't see log in with your bank. I don't see log in with your government, which I wouldn't want to do anyway for a variety of reasons. I see log in with Facebook or log in with Apple. And so it's become and I predicted that privacy would become part of that customer proposition. And now that's come to pass. So if I see the button that says sign in with Facebook, I will never press it. And if I see the button that says sign in with Apple, I will always press it. Yep. And I don't see the button that says sign in with the bank.
Yeah. I think maybe for our listeners, you mentioned the difference between digital and digitized identity. Would you like to expand on that a little bit? Because it's possible that some of our listeners maybe don't understand the nuances and the differences between the two.
Sure, Paul, I'm happy to. So when I talk about digitized identity, I mean taking things that were identity artifacts in the mundane world. So if I take a driving license and I take a picture of your driving license and store that on my phone, that's a kind of digitized identity. You know, it doesn't do anything. It's just an electronic shadow of the identity from the real world. Digitized identity, which is identity that's created for this online world, is very different. Digitized identities are dumb. Like if you show me your I want to know something about you. You show me your driving license. It's just a dumb piece of plastic. It doesn't do anything. I can't interact with it or interrogate with it. Digital identities are smart. They're identities built for and I can give you a very simple example of this, right? If you show me your, I mean, let's say I meet you on a dating site, you know, you're a good looking guy. I would probably choose you, obviously. I meet you on a sort of dating site and I just want to know if you're a real person. That's all I want to know. If I want to know something personal about you, then you won't give up personal details to somebody that you don't know. But I just need to know, is this a person, right? Your driving license can't just tell me if you're a person. If you show me your driving license, you're showing me your name, address, you know, all sorts of things, which are none of my business, right? I would just like to be able to ask your driving license, is this a real person? Take the canonical example that everybody uses where you need attributes. You need to prove to me that you're over 18 because you want to buy guns or drugs or something or whatever it is the kids do nowadays, right? A digital driving license can answer that question. I can ask your digital driving license, is this person over 18 or not? And it can tell me yes or no. It's smart, it's intelligent. How can I ask your driving license whether you're over 18 or not? Like what infrastructure would I need to do that? Well, my driving license. I mean, one of the clever things about smart identities is they can talk to each other. You know, pieces of paper can't talk to each other. You know, my driving license should be able to say to your driving license, is this person over 18 or whatever? So the essence of the argument, Paul, is that I think we've taken we've taken these dumb identities and digitized them, and actually it doesn't really help very much. It doesn't get us where we want to be in that digital world, where we need much more sophisticated identities for that online world. In particular, we need multiple identities. When I might be sitting down at the computer as Dave Birch, the executive from some company. I might be sitting down at the computer as Dave Birch at home. I might be sitting down as Theogenes de Montfort, he's a cleric of Torm in Dungeons and Dragons. I might be sitting down as Dave Birch from the Manchester City Supporters Club. Like, each of these is a different persona that has different characteristics, different attributes, and I might not want you to know that those are all the same person. That should be my choice if I want to reveal that. So one particular problem that we need to solve quite quickly is that when you present your driving license, your passport, you're just one person. A digital identity is one of a portfolio. What should happen when you go to a website and it says, who are you? That should be a menu. It shouldn't be Dave Birch. I should click on a menu and it should say, okay, well, do you want to be Dave Birch at Consult Hyperion, Dave Birch at home, Dave Birch in Dungeons and Dragons, Dave Birch, or Mr. X, and it should default to Mr. X, because 99% of the time it's nobody's business who you are or what you're doing. So if I sound slightly crazy about this, Paul, it's because I am, to me, the difference between those digitized identities and the real digital identities that we need for the future is vast. There is a gulf between these things, and we need the imagination to begin building the digital identity infrastructure for the future. Now, and I accept, by the way, that part of the problem over the last few years has been, people like me probably haven't been very good at sort of communicating that to the policymakers and the regulators. And if you grew up in a world of identity cards, trying to imagine selective disclosure and partial identities, homomorphic encryption, cryptographic blinding, it's impossible, because you just think of an identity as an identity card, and I think somehow we have to work on the narrative around digital identity so that the technologists and the policymakers and the regulators and businesses can communicate about this new kind of identity that everybody needs for everyone's benefit.
Yeah, I still remember when I read your book, Identities, the New Money, and I largely agree. We haven't really kind of been progressing in many of those things that seem so obvious when you read it from your book and hearing you talk about it right now. But what do you think is the problem? I mean, why aren't we actually kind of moving forward here? And is there anything out there today that you see as encouraging signs, perhaps?
Oh, yeah, no, I'm not completely negative. I mean, I do see encouraging signs. I mean, I think at the national level, if you look at countries like Canada and Australia, where they're adopting this more framework-based approach. So the idea that you'll have multiple identities, you'll have identities from the government, from the bank, from health, that will interoperate within that. I think that's progress. You see what people are doing in sort of trust over IP to try and put standard stacks in place. You see great work going on in W3C. I'm very obsessed at the moment with verifiable credentials, because I think verifiable credentials offer us some interoperability that we didn't have before. And there's some great work going on in those kind of areas. So I'm very keen on that. And actually, at the leading edge of that, I was just reading some work by Kalia Hamlin, identity woman, on zero knowledge proofs in verifiable credentials. And I think this is a very fruitful line of thinking. So I'm not, there are some very positive things going on, but, in the mass market, we still see, I've had an account with my bank for 40 years. I go to open an account with another bank and they treat me like I just never existed. And it's ridiculous. And the amount of nonsense that goes on every day with this sort of thing is ridiculous. At the same time, there are very serious problems that need addressing. social media and abuse online and things like this, where we're making no progress at all because we don't have that digital identity infrastructure. So I do have some I don't want to sound completely negative here. It's not like that. I do have some optimism, but you're right, it's been slow.
Yeah.
And I think part of when I wrote that book, I was writing down things that I've been thinking about for a long time, but I thought were kind of obvious. Like if you set it out for people, they'll see that this is quite obvious. Well, that turns out not to be. That turns out not quite to be the case.
Yeah.
I'm working on another book at the moment about identity. Which is provisionally called "Will Robots Need Passports?" And I'm writing a book about how everything needs an identity, not just people. You know, companies need identities, machines need identities, bots, AIs. I mean, basically everything needs an identity. So we need a bigger narrative that brings all those things together. But I think, you know, I want to work harder at constructing a narrative that really works for all of the stakeholders, where people can really communicate around these things. So, you know, yes, we haven't got to where we wanted to get to. And, you know, the amounts of fraud and criminal behavior that go on are still absolutely unacceptable. You know, we've poured a lot of work into strong customer authentication in Europe, so that the bank can work harder to sort of make sure it's me. But all the fraud we're seeing at the moment is because I don't know whether it's the bank, and you have all sorts of problems with, you know, push payment frauds. And I mean, I just saw a fraud yesterday. Somebody sent $50,000 in Bitcoin to somebody who was claiming to be Elon Musk. Like, well, if you can't check whether someone's Elon Musk, effectively, I mean, there's no hope, is there, in that sort of thing? So,
indeed.
Yeah, no, I do have some optimism, but I think I've come to the point where I think we, by which I mean the industry, I think we have to work harder to construct those narratives that bring people together outside the industry.
Yeah, I think the question of identity is something that needs to be at least partially solved by governments and banks. So if you put governments and banks together, I wonder why it's not moving faster. But anyway, let's see where we end up there. But I'm glad you mentioned the Elon Musk and Bitcoin, because I'm going to shift gears a little bit and move on to one of our other consistent themes in this podcast, which is cryptocurrency and tokens. Now, we've covered the current Bitcoin mania a couple of times already in previous episodes, but I'd like to focus on the aspect that you wrote about recently. Is this a bubble? And if it is, does it actually matter? Now, even the European Central Bank compared Bitcoin to Tulips on Twitter recently. But Dave, do you think this is a fair comparison?
I don't, and I'll tell you why my thinking about that has evolved. So my general feeling about the crypto space is I'm quite bullish on digital assets. So the idea, the tokenization of assets and the construction of new markets around decentralized finance, I'm pretty much on board with that. I mean, I've talked to a lot of very serious, not technologists, but very serious people on the financial side who say, well, look, when these token markets are efficient and well regulated, we're going to tokenize everything because it's just a more efficient way of trading. Basically, I mean, not because they have ideological commitments to blockchains and things, but just because they see these markets as being, you know, more liquid markets and more efficient. So the tokenization I'm on board with. The underlying cryptocurrencies, I'm not so sure about. I'm still a little bit, of course, although every time I say I'm not completely sure about it, Bitcoin goes up another $1,000. So you probably don't want to listen.
Bye.
You don't want to listen to me about this, but I'm not sure about the long term. I think a lot of people in the Bitcoin space, they imagine Bitcoin's sort of a religion to them. It was revealed on a mountain by Satoshi Nakamoto and is the unvarnished word. It's the weft of the universe and cannot be changed, you know, whereas for people like me, it's part of an evolutionary tree. You know, we've seen these different branches of this evolutionary tree, and one of them is Bitcoin, but that tree hasn't stopped growing. I mean, there are going to be new. So I don't know about that. The comparison with Tulips, I'm interested in this for several reasons. So first of all, for all of the serious academic work I've read about the tulip bubble, first of all, it didn't really matter. I mean, it wasn't as if the population of the Netherlands was bankrupted and impoverished by this. Basically, a few very rich people in Amsterdam lost some money speculating, not actually on tulips, but on tulip futures. And one of the outcomes of that was that you had a more well-regulated futures market, which was good. I mean, you know, in a capitalist economy, you know, you need a good futures market. So the outcome, I think the outcome from the tulip bubble wasn't bad. I was in a Clubhouse talk recently, which is what I wrote about in that Forbes column. And one of the examples I use in my book was the railway mania. I used a British example. So in Victorian times, the railways began as wholly new mode of transport. I can't remember the exact figure, but I think about 10 years after the first railway was running, the London and Northern Railway was the biggest company in the world within like 10 years. It had just exploded. And everybody was investing in railway shares, and it was the railway mania. And the growth was unbelievable. And then the roof fell in. And a lot of these companies went bankrupt. The shareholders were bankrupted, and they went to the government to get bailed out like the banks did in 2007. But the British government in those days was much less sentimental and basically said, hard luck. You know, why should we bail out badly run companies? You go bust. So they went bust. And it didn't really matter. We still have railroads. I mean, you've seen them. You know, we still have trains and things. I haven't been on one recently, but I'm reliably assured they exist. But what was the outcome of that? The outcome of that was accounting standards. All of a sudden, you had to have accounts that were in a standard format that everybody could understand. You had to be audited so that people. And so all of a sudden, because of that railway mania and the collapse, you had a new kind of market. You had late stage Victorian capitalism. Now people could invest in railways in South America, you know, because they could trust the accounts, they could trust the books. So even like, was the outcome of the railway mania terrible? Well, it kind of wasn't, right? It was and I think there's lots of reasons for thinking that the cryptocurrency is a bit more like that railway mania. So when the roof falls in and lots of people will lose money, people will go complaining to the government, and the government, I hope, won't bail them out, even though that sounds very hard-hearted, because obviously they've been manipulated by the relatively small number of people that own vast quantities of Bitcoin. But we may see a new kind of, I mean, I call it ambient accountability. So you may see a new kind of asset management and accounting that comes out of that kind of shared ledger blockchain world, where there's a transparency, where everybody can see what's going on. But because of advanced and more sophisticated types of cryptography, you can do new kinds of accounting that you couldn't imagine before. And an obvious example of that is the kind of open book accounting that was the ideas of this go back to the 90s, which is, you know, if you use, you know, homomorphic encryption, for example, I should be able to go to a blockchain and I can compute that your assets exceed your liabilities and that your business is solvent without actually being able to read what any of those assets or liabilities are. Now, it's the same argument as digitizing the driving licenses. Like, if you live in a world of accounts and ledgers, that sounds crazy. Like, how can you audit somebody's books without being able to read any of the entries? But it's that same digitization. So this idea that we have these new markets and new ways of regulating and managing them, I personally think that that's very exciting. And to be honest, in many ways, I'm much more interested in that than in the underlying cryptocurrencies. I mean, I am interested in them, of course, because of intellectual curiosity. And also, you know, I wrote a book about digital currency last year, which actually was another piece of luck, because I couldn't have planned it like this. But it's an interesting topic. And I said to my publisher, do you think people would like a book about digital currency? and she said, actually, it's a good topic, but you need to do it quickly because it's very topical. So I said, okay, all right. So I pulled all the stuff together and worked quite hard, and the book came out in May. And by coincidence, I couldn't have planned this better. My book came out the same week that the Chinese government began issuing digital currency in 4 cities in China. So I thank them for their marketing campaign on my behalf. It was very kind of them. And I'm very interested in the options around implementing digital currencies. Cryptocurrencies are only one of the options for implementing these things. Madame Lagarde has said that she expects to see a digital euro in 4 years. The Bank of England's doing a consultation. We see all this discussion going on about the digital dollar. So digital currency actually has happened quicker than I was thinking. When I was writing the book, I was thinking I was being a little bit more futuristic. I was thinking sort of 3 to 5 years out, we're going to start having these discussions. But in fact, it was within a few months, and it's really been accelerating. So it's very exciting time. So even if you don't think Bitcoin is going to be worth $1 million each and take over the world, it's still important to understand what's going on in that sector and the implications it has for new kinds of markets.
I'd actually like to continue a little bit on the whole Bitcoin subject and following on what you said. You made a really interesting point in one of your recent blog posts that Bitcoins are actually not fungible. So I assume it means then that any individual Bitcoin or even a fragment of one can theoretically be traced all the way back to its origins. Now, this could have some interesting implications on owning Bitcoin going forwards, right? Like previously stolen coins being returned to their owners by court orders, for example. And I'm just wondering, could you explain this thinking a bit more, and especially now in light of Tesla and allegedly other large corporations investing in Bitcoin? Isn't this a huge problem for them?
I mean, whether it's a problem or not, I couldn't say, because I'm not a lawyer and I don't know how this will work out. But yes, you see, the issue rests in law as to whether Bitcoin is money or property. If it's money, then it has to be fungible. In other words, if you steal some money from me and then you give that money to somebody else, can I go to that other person and say, well, that's my money, you have to give it back to me? And the courts say no, because all money is the same, right? So any pound in my bank account is the same as any other pound in my bank account. You can't say that that pound belonged to this person. And it's one of the characteristics of money. You can't do that. Property is different. If it's property, if you steal my car and you sell it to somebody else, I can go to that other person with a court order and get my car back, right? It's just because you've sold the property to somebody else, that doesn't, it's still my car. I want my car back, you know, and they have to go to you for compensation. It's not my problem. So the question is Bitcoin money or property? And the first, legal decisions in that space, the IRS, the courts in the UK are, sorry, it's property. It's not money. It's not fungible. Every Bitcoin is traceable. Now, the Bitcoin aficionados might say, well, but if I get my Bitcoins from some criminal enterprise, I've been doing a ransomware attack or something, or, blackmailing somebody or whatever. I'll take my Bitcoins and I'll put them in a mixer and I'll jumble them up with all sorts of other Bitcoins. And then the output from that mixer will be some new coins and I'll be all right. But that thinking doesn't work, because if I trace the coins back and I discover they come from a mixer, if I see that any of the coins that went into that mixer were criminal, then, well, it depends actually. There's a very good paper about this by Ross Anderson and his friends. What do you say? If there's 9 good coins go into a mixer and 1 bad coin, and then you have 10 coins that come out the other side, is each of those coins 1/10 bad? Or do you have 9 good coins come out and 1 bad coin come out? Now, I would say what governments will say is that if you put 9 good coins and 1 bad coin into the mixer, then all the coins that come out are 1/10 bad. And it doesn't matter if a coin is 1% bad or 99% bad. The coin is tainted. That's what the word I would use. The coin is tainted. You know what I mean? Tainted. It's colored. It's stained.
Yeah.
And you can imagine a situation where governments will say to banks, if you accept any tainted coins, that's a prima facie case of being an accessory to money laundering. And so they will just stop doing it. And that opens up a whole kind of headache of things like, I'm going to buy something from you. Well, I need to check the coins first to make sure the coins that you're going to give me aren't tainted coins. Or can I rely on an exchange to do that for me? And will they give me a legal liability? So if they give me a coin that they say isn't tainted, but it is tainted, and I have to give the coin back, do I have does the exchange have to compensate me? And all sorts of fascinatingly interesting things, which I don't know the answer to any of. I have absolutely no clue. I have no idea how this will pan out. But I just think it's very fascinating. And it's something that needs to be understood when you talk about mass markets emerging in this space. Because on the one hand, I mean, I was joking about it this morning on Twitter again. On the one hand, if we could persuade criminals to start using Bitcoin instead of using cash, that would be great, because it would be much easier to trace where all the criminal money is going. That would be a really good thing.
Agreed.
But would it pollute the pool of Bitcoins to such an extent that Bitcoin effectively became unusable? I don't know. I don't know. An example that I give, I wrote a book in 2017 called Before Babylon, Beyond Bitcoin, which was about the history and future of money. And one of the examples I gave in that book were the assignats that were in circulation after the French Revolution. So after the French Revolution, the revolutionary government confiscated land. And they issued these notes which were backed by land instead of by gold, because they didn't have any gold. So these were called assignats. And although in theory they were at par, a 1 franc assignat and another 1 franc assignat should have been the same, people would countersign them because in the past they've been using bills of exchange and so on, and they were used to signing things. So when you got an assignat, you'd look on the back to see who'd signed it, who had it before. And if yours had been owned by a bishop or a king or something, it would be more valuable than one that was just signed by me. Like, what do you care if it's the sort of thing? So in theory they were all worth the same, but in practice they weren't, because of who'd held them. Now I wonder if that might happen in the case of Bitcoin. So what happens if clean Bitcoins are worth more than dark Bitcoins, dirty Bitcoins? What happens if of the clean Bitcoins that were owned by, famous pop star, Lady Gaga, what would happen if Bitcoins that were owned by Lady Gaga were sort of worth more than Bitcoins that were owned by me? I mean, that would be really fun and interesting. And, you have a lot of people talking now about the growth of non-fungible token markets. Well, there's a very simple example. If my coin was once in Lady Gaga's wallet and it was given to her by, I don't know, some other famous person or something, then I can look at that forever.
Yeah, I think that's
No, I can treasure it. I'll wake up in the morning and I'll look at my Bitcoin that belonged to Lady Gaga, and I'll treasure it and I'll love it.
That's a really interesting segue to one of the topics that I wanted to discuss about, but we're kind of running up against it on time. But I do want to pick up the NFT topic a little bit, because it's been so hot lately, and and even you've been joking about it a little bit on Twitter. I've seen. Now, because why wouldn't you? Why wouldn't anybody? NFTs are a little bit of a fun topic. But I mean, for the listeners who might not be familiar with the non-fungible token idea, the idea is to kind of have this digital certificate of authenticity of typically some kind of binary content, like a piece of art or a picture or a tweet, for example, that we've been seeing.
Well, the way I explain it to people is, look, let's say we're going to go and watch Manchester City in the final of the Champions League, right? There's two ways. You could imagine two different ways of doing this. Like if I go to Glastonbury, I go to a pop festival. Actually, let me think of a. What's the one in Denmark I went to? What's the big pop festival in Denmark they have every year, or did have?
Roskilde.
Roskilde. Okay, yeah. I'll use that as the example. More people know that. Well, let me explain NFTs using the example of tickets, right? So if I go to Roskilde, which I did go to actually, by the way, I had a fantastic time. I absolutely loved it there. I'm going to Roskilde. I buy a ticket for Roskilde, and all the tickets for Roskilde are the same. There's 50,000 people, and they've all got the same ticket. And you know, if I drop my ticket, I could pick up your ticket. It doesn't matter. We all go in and out. You have your ticket. You go in. You're in Roskilde. All the tickets are the same. When we go to watch Manchester City in the final of the Champions League, all the tickets are not the same. I have a ticket for row 1, seat 1, end of story. It's not the same as the ticket for row 1, seat 2, right? They're not fungible. They're not the same. Now, if there's a market for non-fungible things, then if I take that ticket and put it on the blockchain, actually, tickets are a bad example. Let's go back. Let's do art, because art will be what's in people's head at the moment. Okay. Art will be what's in people's head. I mean, tickets is actually a better. Okay, I got it. All right, I'll do it. Okay. Yeah, no, NFTs are really kind of hot at the moment because of all this stuff that's going on in the art market with people selling NFTs, which are ludicrous. I mean, you know, somebody paid 70. So basically, you know, there was this kind of crypto thing going on last week where a guy that was the friend of the artist paid 70 million for the painting, but the artist actually owned 2% of the ICO fund that was used to purchase it. And the ICO went from $1 to $20. So the 8 million they paid Christie's was great value for money because they made hundreds of millions and all. There's all this nonsense going on in art. And it sort of doesn't make any sense, because if you read the Christie's sale conditions, it says, you know, you're buying the NFT. Basically, you're buying like a receipt for this painting, but you don't own any of the rights in the painting. I mean, the artist still has the copyright. There's nothing you can do with that NFT. If you take a picture of that painting and stick it on a T-shirt, you'll get sued by the artist because he has the, you know, your NFT. It's just a pointer. It doesn't mean anything. And so people are laughing about that and saying that that's ridiculous. And it kind of is, you know. Does that mean NFTs have no future? No, absolutely not. Because there are an awful lot of things that are non-fungible that people do want to trade. And an obvious example would be tickets for the Champions League final with Manchester City, right? So if I've got ticket A1 for the final, and I sell that to you, that's a valuable NFT which is going to you, but it has utility because you're going to use that NFT to get into the stadium and get that seat. Why is it efficient? Well, because there's no middleman. It's just me selling the ticket to you. There's no venue and ticket master and credit, and there's nothing in the middle, right? It's just whoever has the possession of that NFT, which of course is demonstrated by the possession of the private key that belongs to the wallet. Whoever has possession of that NFT has the seat. That makes complete sense to me. If I'm playing online Dungeons and Dragons with you, and there's you know, some sort of magic sword that I want to get, you know, well, if I can copy that magic sword as many times as I like, it has no value, you know. If there's only one of them, it has value. Well, when I'm playing World of Warcraft, there's somebody in the middle to ensure there's only one of those swords, which is Blizzard Entertainment. But in a decentralized market, who's going to make sure that there's only one of those things? Who's going to make sure there's only one ticket in row 12, seat C, for me to go and see Hawkwind at the London Palladium on the 1st of May? Who's going to be in the, if there's a venue or there's a Blizzard in the middle, fine, they can manage all that kind of thing. But in a decentralized world, if there's nobody in the middle to do that, and we just use, you know, the decentralized wallet structure to manage it, we have a much more efficient market, and in many ways a much more interesting market because it's sort of a global market. So yes, there's some crazy stuff going on in the art market, and yes, it is a bit silly that you can buy an NFT that doesn't entitle you to anything. Does that mean NFTs are crazy? No, I don't think it does. I think there are lots of applications of NFTs that are really positive and really interesting.
Wow. Yeah, it's so easy to pick on NFTs, but I'm glad kind of to find this other side of that, kind of beyond the current kind of conversation. I think that's a very valuable point. But wow, does time fly when you're having fun? We had a long list of topics that we could be talking about.
Well, there's a really interesting questions, Ville. Thank you for making me think.
No, no worries. Again, this was one of the more interesting episodes. We had really interesting points of view from you. But again, we're up against it on time. We could go on forever. Maybe we will do a spin-off later. We had a long list of topics that we didn't get to cover, unfortunately. But Dave, Paul and I would like to give you a chance to let the listeners know how can they find you, get in touch, or perhaps buy a book.
Yep, just go to www.dgwbirch.com or follow me on Twitter @dgwbirch.
Fantastic. And thank you again for coming on the show and showing some great experiences and insights with us here today.
You're welcome.
But most importantly, thank you, our dear listeners, for hanging out with us for another episode. And as usual, we'd love to hear from you. So please send your feedback, comments, jokes, guest requests, or memes to us over email at hello@fintechdaydreaming.com or ping us on LinkedIn, Twitter, YouTube, or anchor.fm page, and do get in touch. Paul and I will be back in 2 weeks' time with another new, fantastic guest, and I will see you again then. This has been Fintech Daydreaming.